Hi, this is Zak Mir with the Valentine's Day edition of the Bulletin Board Heroes here on Share Talk. It's Sunday, the 14th of February. Starting off with Braveheart, where it looks as though shares are ready to deliver new leg to the upside. Nice close on Friday above the initial February peak at 42 pence, and while we're above the 50-day moving average at 37, looking towards the top of a rising trend channel from November as high as 100 pence. Ideally by the end of next month if we can get some momentum going, but at end of day close above 47 pence, and that November resistance line should accelerate the price action quite well at Braveheart. Onto a stock which is looking encouraging at the moment, and the reason for saying that is, if I can type out the code, is that we've had in both December and January gaps to the upside. They were filled, but the uptrend and the gathering momentum seems to be in place. Rising 50-day moving average at 6 3/4 pence, and while we're above that, looking towards the top of a rising trend channel from September as high as 17 pence. Final trigger in terms of momentum would be an end-of-day close above Friday's intraday high at 8.5 pence. On to Contango, which has a similarly bullish type of demeanor at the moment. Broken this resistance line there from December at around 8.5 pence, and while we're above that, looking towards the top of a rising trend channel from back in October at 14 pence, and that could be hit as soon as the end of next month. At the moment, the stop loss back below the 50-day line on an end-of-day close basis at 7.8 pence. Stock which doesn't have much charting data to look at, but nevertheless seems to be quite encouraging with that weekly close that we had there for Capital Metals. The reason for saying that is we've broken that line of resistance from last month at 18.5 pence and basically bounced off that line on Friday as the intraday support area. While we're above 18 pence, looking towards the top of the rising trend channel from last month as high as 25 pence, and that target could be hit as soon as the end of next month. Stock which has gone from strength to strength and continues to delight the bulls is Dev Clever. I suppose the exciting part here in the recent past was the price action on the 2nd of February, the long candle through resistance, and basically we've consolidated that price action since then, closing above 24 pence, which was the initial peak of February for last week, and the view is that at least while we're above the floor of the rising trend channel from the autumn back in November at 21 3/4 pence, we could accelerate towards the top of that channel as high as 47 or 48 pence, ideally over the next 1 to 2 months, so maybe going into mid-April for that particular target. So looking pretty strong indeed for Dev Clever at the moment. Couldn't resist looking at Genedrive again, given how many people seem to be fans of the shares at the moment. Clearly they seem to have a lot to look forward to. Rising trend channel here from last month. Floor of the channel obviously at £1.30, which was the low of Friday. While there's no end-of-day close back below £1.30, we're looking towards the £2 area, perhaps a bit more now, up to £2.20, which is the January resistance line there, the upper parallel I've drawn of the late January line there on the daily chart. There's also a resistance line projection from back in July, but whatever happens, it looks as though above £1.30 we're in bull mode, and £2 plus would be the target as soon as the end of next month. Next up, another stock which is pushing to new highs, Jangada Mines. Here you can see that had a good close to the week after a key reversal to the upside on Thursday. That level of resistance from January at 7.7 pence is now going to be key for the early part of this week. End of day close above that could be enough to accelerate the shares towards 14 pence and the top of a June rising trend channel. That could be seen by the end of next month. Onto a stock where there's been a slow burn to the upside, Kodal Minerals. The highlight for me here was the gap through the 50-day moving average in the beginning of September. That's remained unfilled, which as regular Bulletin Board Hero viewers will know, is one of the signs of a potential multi-bagger situation. If we get a decent break of that resistance line there from September at 0.11 pence. Then the next target here over the next 2 to 3 months could be as high as 0.23 pence. So maybe by the end of April up to that level. Stop loss at the moment back below February support, i.e. sub 0.08 pence. And at this stage, really back below the 200-day line, just below 0.07 pence, really killing the upside scenario for Kodal Minerals. Onto a stock which has the merit, pretty strong technical merit at the moment, which is bullish divergence. We had the bear trap for the beginning of February and then a higher support now, but the RSI remained around the 30 level, and that looks as though that could propel the shares not only through that resistance line from August around the 3.2 pence level, but then back up to retest the best levels of the post-May period as high as 6 pence. But an end-of-day close through 3.2 pence could be the sign that Petrel Resources is on its way after the recent bear trap below 3 pence. Stock which is just breaking out after an extended recovery period is President Energy, so a decent weekly close above last month's resistance at 2.4 pence. The longer we stay above 2.4, the greater the chance of a 5 pence target at the top of a rising March trend channel from last year. Time frame on 5 pence as soon as the end of next month. A piece seems to have broken out of remote monitored systems, so we'll see what happens after the big vote there. Broke the resistance line there from November around the 2.5 pence level, and the longer we stay above that, and especially above the 50-day line at 2.25, the greater the chance of a retest of the post-November resistance at 6 to 7 pence. ETA on 7 pence probably going into April at this stage while we remain above the 50-day line. Just a couple of shares to go now. First one is one which is broken very nicely, Sabien Technology. Here we've broken through the 50-day moving average and the initial February resistance at 0.17 pence. We've also closed above the top of the gap from last month at 0.18, which can be a very good bullish signal indeed. Bear trap gap reversals are one of the strongest signals, in fact almost in many cases even stronger than an unfilled gap to the upside. So above 0.18, we're looking at 0.35 plus at the top of the broadening triangle from October, and the stop loss at the moment, the 200-day moving average at 0.14 pence. Finishing off with the unfilled gap to the upside, which seems to be one of the more high-profile ones at the moment. As I said, this can be a multi-bagger signal. So with San Leon, we've gapped through resistance, I think it was the beginning of last week or the week before, through 28 pence, and have held that gap, the top of that gap. So above 28 pence, looking towards the top of a rising trend channel from this time last year, as high as 60 pence, and that could be as soon as the end of next month or perhaps going into April. That's it for me today. More updates tomorrow.